you want to make sure that your business and your assets are safe from liability, do you also want to have some tax mitigation strategies that are going to save you some dough? Well, in the next few minutes, you're going to learn a lot about ways to risk mitigate and also tax mitigation. Hey, my name is Kenneth French. I'm with vastsolutionsgroup.com. We're going to be talking about 831s or B's captive, or 831 B's or captives. And these are going to be things that you probably haven't heard of that are going to help you as a small business owner. You're probably a small business owner who's got lots of dough, lots of assets, and you want to make sure that you are safe from liability, and also you want to make sure that you're lowering your taxation, because who knows, maybe saving some dough on the taxes can mean more business for you in retirement. All right, let's get into it. I'm going to show you my screen, and then we're going to go over some of the specifics of captives. Sounds like, wait a minute, what's a captive? It's just another thing of, well, weird terminology. Well, in this case, this safety pin is going to show you good tax savings. Okay, let's get right into it. By the way, Kenneth French, vastsolutionsgroup.com, entity that's been around since 1969. We've helped all insure since 1969 in one way or another. These are hot items. Captives are a hot item right now. 831Bs are now talked about because people are getting, well, I don't want to, they're getting burned by insurance companies. And so they want to put together their own insurance company. In effect, that's basically what a captive are. So what a captive is. So the definition, it's an insurance company that's wholly owned and controlled by the entities that they insure, generally speaking. I'm going to speak in general, by the way, because there's so many, ins and outs of captives and of this, the captive world, 831B world. So what I'm going to say is, please, if you have any questions, go ahead and email us at info@vastsolutionsgroup.com, or go ahead and look at our website. We have some key resources as far as captives go there. But at the same time, you can email me at kenner@vastsolutionsgroup.com. But really, go to the website. You're going to be happy that you did. And there's going to be some tools there that are going to help you as a business owner in general anyway. And if you become a member of our community, we call it the Vast Vault. In there, membership is your key. So what I would say is you're going to learn a lot about some strategies that are going to help you as a business owner, one of which will be captive. So the ownership structure, they're owned and operated by a parent entity. As an example, let's say you have, you're doing $100 million in revenue, and you have two entities. They have a lot of risk. Well, what you do is put together an entity with our help that issues policies to the underlying companies, those two companies. And then what ends up happening is you get the policies in return for the premium you're putting in to the policies. And at the same time, the nice thing is you're getting tax deferral. Instead of, writing a check to ABC Mutual Company, and then that money's gone. Well, hopefully you don't have to file a claim, by the way. But at the same time, you're writing a check to, here in this case, if you have a captive, you're writing a check to yourself in effect. Not exactly, but let's get into that. But anyway, that is better than writing a check to ABC Mutual Company or whatever. Anyway, and you get to have tailored policies. So these policies are specifically tailored to you as you want them. So, there's all the, if you go to an ABC, Mutual Company, have all these little specifics that you have to abide by. But in this way, you have to abide by insurance rules and regulations, but they're tailored policies for you and the underlying entities. So you get to take part in putting together the policies. So flexibility, cost savings. Well, in some cases, you could put together policies that are lower in premium than you would be paying in the open marketplace, because you're making customized policies. And finally, risk management. You can put together captives that help with your specific risk. So that's what we say. Captives enable organizations to better manage their risk, because they really do. Would you rather go to a tailor who's going to customize your clothes, or would you rather go to, no offense against, let's say, Sears, where you're going to get an off-the-rack suit? Well, you probably want customized policies. In this case, customized policies, or in that case, suit, ends up potentially even being lower depending on the circumstance. Plus, as an example, all of a sudden you don't have to worry about the money that's going away to the insurance company, the premiums that are going to the insurance company, because you get to keep them in your own 831B or captives. So let's talk about more benefits. Again, customized coverage, cost savings. You get to improve your cash flow. So that money is going into that insurance company that, again, you're the owner of. You get to figure out the cash flow as a result, because you can customize when the period when the periods are for what they call modality, when you write the premium check. So you get to improve your cash flow as a result. Risk management control, you get to have more strategic ways to put together the policies that allows you to mitigate the risk that you need versus an insurance company. Because when you're writing premiums from an insurance company, truly it's the insurance company that dictates everything. Tax benefits, in general, when you write a premium check to ABC Mutual, by the way, the cool thing is, I will say, cool thing is you get tax mitigation right off the bat, right? Now, at the same time, when you write a check for your own premium policy, or remember in a captive, you get the tax benefit in that you can strategize when the premiums are made, which potentially could lower your taxes as a result, depending on the timing of it. So here, that's why we say, it can provide tax advantages such as deductible premiums and you get the tax deferral of the assets, the premiums as they grow. When you pull them out, typically you're paying a different taxation, so it potentially could be a lower tax. Depends on the domicile, depends on your tax rate, etc. So anyway, by having the premium in the C Corp, which is usually what these entities are utilized as, when you pull the money out, it's therefore going to be saving taxes as you've put the money in over a elongated period of time. Hence the reason we say tax benefits. I'm going to go over this one. This is really important. Customized coverages. Everyone asks, well, what coverages are covered? Well, almost any business insurance. So whatever you can think of, you could have cyber insurance, your business interruption insurance. You could have foodborne illness insurance. Any business insurance basically can be customized on the open market, really. So think of the most random insurance that you need for your business, and typically that will be able to be covered by a customized insurance policy. By the way, again, these are all general. What I should say, go back to your insurance provider, financial advisor, usually insurance provider. Get some of the specifics about customized policies in your situation, because they might already be working in a captive environment and might be able to help you. Or if you need help, again, info@vastsolutionsgroup.com. One thing I should also note, most of our clients are real estate investors. Yeah, there's a lot of real estate that can be put into a captive, meaning you could do a lot of insurance policies that will help you as a real estate investor. Cost savings, eliminate the middleman. You don't have to go to the insurance company, in this case, ABC Mutual. Administrative costs, in some cases, you don't have administrative costs because, by the way, you don't even see all the premiums that are paid. You don't see the administrative costs. They could be huge, but you just don't see them because they're part of the premium payment. And as I mentioned, customized coverages, that can end up lowering your cost, and the risk management ends up being a big deal, as I mentioned. Let's go over the risk management, how it works. What really ultimately is a captive? If you really, really think about it, all it is an insurance company that you're putting together for yourself. You have to abide by the regulations, but truly that's what it is. So let's rip apart what an insurance company is. Well, you have what's called an actuary that helps to analyze the risk when you're implementing or putting together the policies, number one. Number two, well, you have a claims department. If there's a claim, the claims department will pay, if so being, will pay the claims of the incident, whatever the incident is. At the same time, you have to have a board of directors. So the board, the insurance company, in this case, the captive, well, it has to have it run like an insurance company for the actuary, for the claims department, and then have it run as it's truly is an insurance company, because that's really what it is. So hence the reason, that's why I say, well, yeah, to a certain extent, you're putting together your own insurance company, but it's got to be performing as a true to life insurance company. Plus, you want to control your insurance costs, and one way of doing that is with a captive, so the premiums don't go up, and if they do go up, you can control to a certain extent the premium amount. And again, the risk management element of the customized coverage. Just think, let's say you have audit insurance. Let's say you want audit insurance. You could put different types of audits in your coverage that is only specifically for you, so it's customized. Now let's go over the logistics of a captive. Premiums are tax deductible, generally speaking, with you and a captive, or also with you and ABC Mutual, as I've been calling it. So your business writes a check to the premium for the premium to the captive. There we said 2.4, but it's going to be 2.8 here pretty soon as far as the maximum check that can be written or wired amount. So the cool thing is it goes to the captive, well, and then it's deductible. Then the premiums are tax-free on the backside. So on the captive, the check is written. Let's just say it's a check. Let's say it's, to be simple, 2.4 million. Check goes over to the insurance company. The insurance company, or the captive in this case, does not have to pick that up as earnings. So it's a tax-free structure that has just occurred. Number one. Number two, you still get the deduction as a captive manager, or I should say as a captive shareholder, stakeholder, etc. The 2.4 million, you get a deduction on that 2.4 million. So whatever your tax rate is, talk to your advisor, know about the specifics. Again, so on the captive side, you don't have to pick that up as earnings, so you don't have to pay taxes on it. Now you have underwriting profits. Let's just say you have no claims, and now the policy, quote policy, let's just say it's one to be simple, 2.4 plus another 2.4, $4.8 million in there, and you have some profits. Let's just say the profits are, just to be simple, 2.4 million, just to pretend, right? Because it's grown because the investment management assets have gone up. Well, what happens? You can do a dividend, in effect, depending on the circumstance. You can do a dividend to the shareholders. That's when taxes are paid at that point, by the way. Profits, just like, leaving the captive world, you have your business making profit. Well, that has nothing to do with the captive, goes to the shareholders, just like normal, right? So it's in sum, you just have another business, and that business is an insurance company, right? And so when the profits are there, give money to the shareholders, just like your business. When there's profits there, it goes back to the shareholders. So that's the analogy. You have a company that happens to have insurance bent to it, okay? And again, the tax deferral, that's not the primary reason for doing captives. That should not be the primary reason for doing captives. But the nice component is you get to save some taxes, okay? Anyway, but more than anything, remember, it's the risk. You get to take care of your risks that are in your business that, again, are customized, that you probably haven't taken care of, that you need to take care of, okay? Let's go over because I mentioned the tax benefits. Again, the secondary benefit, deduction of insurance premiums. I'm underscoring that because that's cool. My example, 2.4 million deduction. Just like you're buying a computer or buying a car for your company as an example, it's a deduction. Same thing here. You get to deduct the premiums, okay? Tax deferred growth, as I mentioned, you don't have to pay your taxes on the growth, right? Typically, depending on the circumstances, until you pull the money out. Hence the reason the reserves, we say tax deferred growth on the reserves. Talk to your tax advisor about the specifics on that, because you could get there's some specifics, there's some cool things you could do there. Potential lower your tax rates. Let's just say because you have the premiums going in to your captive, and then your expense, it nets out your expenses, so it lowers your tax liability, lowers your tax bracket. Therefore, it can lower your tax rate in that case as well, in absolute terms. And again, you get control over tax planning. You can pick and choose, if structured correctly, you can pick and choose when to put away your premium payments, which can help you depending on how the plan is formulated. All right, there we go. I tried to go through this as quickly as possible, so really it would make sense to you as far as what a captive is, just in a quick bullet format. It's just something for you to think about as a small business owner. It doesn't hurt you, go to our website, vastsolutionsgroup.com, or give us a call. All our information is on the website. But what I would say is, your tax provider, your insurance provider should have a little bit of an inkling what a captive is. And at the same time, if they have any questions, obviously they can call us as well. But what I would say is, they know your tax. They know your liability situation. They know your insurance situation. Go back to them. Ask them a little bit about a captive. If one works, get a feasibility study, or because you heard about it here, reach out to us. We'd love to help you. All right. What I'm going to do is I'm going to take back my computer and let you know, hey, I'm totally here for it to help you. Here at vastsolutionsgroup.com. Because you stayed this long, sometimes I'll give away a copy of my book. I'm a former Forbes small business owner contributor to Forbes.com. What I would say is the Entrepreneur's Manifesto, a collection of smart financial advice. Number of articles I've written, not only for Forbes.com, but just in general. And these are articles that should help you as an entrepreneur email us at info@vastsolutionsgroup.com, info@vastsolutionsgroup.com. You'll get a copy of this. Just write book and give us your address. You'll get a copy of this. It's just one of the benefits of staying this long and of listening to some of our content here at vastsolutionsgroup.com. We really appreciate you taking the time to listen, and hopefully you'll take us up on getting a hold of us. I think a lot of our stuff makes sense, and a lot of our clients have said 100% it makes sense. Since 1969 we've been around. Once again, Ken French, I'm signing off.